market movers. This is The Pulse with Francine Lacqua.
Well, good morning again, everybody, and welcome to The Pulse. I'm Joanna Bersetchi in Dubai, in for Francine Lacqua today. Now, President Trump has moved to oust the Fed Governor Lisa Cook following allegations that she falsified mortgage documents. But Cook is pushing back, saying she will not resign, and the president has no authority to make her. Her lawyer says they will take whatever actions are needed to prevent the action. Bloomberg's Kriti Gupta joins us for the latest. So I guess, Kriti, the question then becomes whether the president actually has the legal grounds to force Lisa Cook out of her seat. Her lawyers don't seem to think that he does.
It's a tricky situation. It's a very high bar, one that is, frankly, unprecedented, simply because there's already investigation that's been opened into this. So there's a couple of parties here that you need to keep in mind. So, of course, Lisa Cook, the allegations against her, as you pointed out, is that she has falsified mortgage documents, citing that she has two houses, one in Michigan, one in Georgia, and that both are her primary residence. And that, when you say something has a primary residence in the States, comes with certain tax benefits depending on where you're located. So the allegation here is those falsified mortgage documents actually helped her kind of commit something adjacent to tax fraud. Again, the allegations. That being said, this is something that already the Federal Housing Finance Agency has been looking into. The DOJ has already opened an investigation into. So now that these investigations are up and running, the bar to single-handedly fire Lisa Cook only with the power of the executive office is a tricky one, because you then have to point and kind of prove that the investigations themselves are either not doing their job, have come up short, or that there was no other recourse. And that's kind of the fight that Lisa Cook is facing to have.
Yeah. Okay, so there's, I guess, a dispute going on around her position on the Board of Governors. But not so long ago, we had Adriana Kugler also step down from her seat. So potentially we're looking at one, maybe even two seats on the Board of Governors that President Trump may need to fill. Is this going to have a bearing on the direction of Fed policy from here?
Well, the thinking is that it would make it a lot easier for Donald Trump to have a four-person majority when it comes to the board of the Federal Reserve. Remember, it's not just Lisa Cook that he's got out for. It's Jay Powell as well, who he has very publicly stated that he wants to replace. Now, this is going to be significant simply because you want this kind of easier monetary policy. But again, that's not a one-person game. So the thinking is, or at least the approach seems to be, that he can do with the Federal Reserve Board what he's done with the Supreme Court, which is ultimately pack it with doves and pack it with people who align with themselves. Whether that's actually doable, given that some of these terms end as far or as early as 2026 to 2038, in Lisa Cook's case, that's yet to be determined.
Yeah, really crucial for market direction from here. Bloomberg's Kriti Gupta, thank you for giving us the latest. Well, President Trump has other threats as well. He's threatening new tariffs and export restrictions on advanced technology and semiconductors in response to digital services taxes imposed by other countries. Let's bring in our chief Asia correspondent now, Rosalind Matheson. Good to have you with us. So maybe let's just start with, for the region, quite a significant economic threats coming through from Trump. And when he talks about leveling these extra tariffs or imposing export restrictions at countries that have applied these digital services acts, the mind goes straight away to Europe.
Well, that's right. In fact, this could impact countries around the world. You can see the impact, in fact, in markets in Asia today, in Korea and Taiwan. There's concern about yet more penalties on tech companies, in the region, restrictions on exports on semiconductors, because he really, really doesn't like digital services taxes. So what this tells us is two things. One is that Donald Trump keeps moving the goalposts on trade. You think you've got one thing sorted and another thing immediately crops up, be it tech, be it furniture or something else. And the second thing is he really does zero in on this digital services tax. He's been doing that for many years, and he's had some success. I mean, Canada dropped plans to have such a tax, but there are these taxes on a couple of dozen countries around the world. And what they're struggling to do is find a way to get this, their hands on some of the income from these companies that don't have bricks and mortar operations in their countries, but they're getting quite a lot of revenue from those countries, hence these taxes. And Donald Trump is obviously turning his eye back to those taxes and saying, I'm going to come for you because of it. The question is it asymmetric response? So does he come for tech companies in the same country as the tax or something different? We simply just don't know.
Yeah. Again, adds to the uncertainty. But let's talk about maybe one of the existing trade deals, the one that was inked between U.S. and South Korea. The new South Korean president had a meeting with Trump. It seemed to have gone well. But again, the South Korean president was not able to extract any further concessions from the U.S. or improve the terms of that deal.
Well, that's right. So the underlying trade deal is still there, and he didn't get any joy there. But he did get through the meeting, and he himself said that for him that was quite a result. He said afterward he was a bit worried about a Volodymyr Zelensky moment, which is, of course, that famous dust-up in the Oval Office earlier in the year between the leaders of Ukraine and Donald Trump. And he avoided that. He said, phew. He also said that he'd studied Donald Trump's book, The Art of the Deal. So he came in quite strong with the flattery. He was flattering Donald Trump for his peacekeeping efforts around the world. Korea's agreed to buy more planes, more Boeing jets. They've made agreements on shipbuilding. So there's a lot of stuff there around investment that will benefit the US. And so the meeting seemed to go pretty well, all things considered. Yes, he didn't get any movement on the tariff rate, but also he came out of that meeting pretty unscathed, which was probably a result in itself. And also there are some of these investment deals, including on the shipbuilding side, that will benefit Korean companies. So for the new president of South Korea, probably the best result possible.
Yeah, maybe, the follow-up book to The Art of the Deal is going to be about the art of flattery. Rosalind, thank you so much for joining us, our Chief Asia Correspondent, Rosalind Matheson. Okay, let's return to the markets. I'm joined now by Christian Mueller-Glissmann, Head of Asset Allocation Research at Goldman Sachs. Good to have you with us on the show. There's so much to discuss. But first, I want to bring you to something that you wrote about in your research note, and you referenced the fact that these markets have been in a Goldilocks regime because the markets are pricing in for a more dovish Fed, so rate cuts are beginning to get more priced into the curve. But at the same time, the earnings profile out of American companies remains quite robust and quite resilient. Do you expect this Goldilocks regime to continue?
Yeah, no, I think we had this Goldilocks summer to some extent with the holidays, and it does seem like we're getting the first shocks to it. I think you mentioned France, you mentioned Fed independence concerns. I think we'll have to deal with the U.S. data as it comes in. So I think it will be much tougher to maintain that type of Goldilocks flavor in markets, also considering how far we've come. Like there's been major risk premium compression, there's been valuation expansion, volatility reset, re-risking. So I would say that not to kind of follow the usual seasonality pattern, because September tends to be always quite weak, but I think it will be quite a difficult return after the summer holidays, and I'm not sure that we can sustain that type of Goldilocks momentum we've had.
Yeah, so let me ask you about the latest Fed developments, the Trump administration, or Trump himself, meddling, interfering with the Fed, certainly most definitely weighing in on what he thinks the Fed should be doing. In what way will that extra risk premium be showing up in financial assets, if at all?
Yeah, I mean, we already have seen a significant dovish repricing from the Fed. I think Jackson Hole, if anything, on Friday turned out to be somewhat more dovish than some people were fearing. So from that perspective, you got a lot of relief with the Fed already shifting into a more dovish direction. So now if you kind of see even more dovish pricing, there is a fear that you kind of have to rebuild term premium. And this Fed independence usually, and at the same time, the fiscal concerns usually turns up in the back end of the curve in longer dated bond yields. So what could happen is actually that even though the front end comes in, the back end won't and possibly even moves higher. You get steeper yield curves. And that kind of mitigates a bit like the positive impulse, you could say, from a more dovish Fed.
Yeah, we were noting earlier on that 230s is at the steepest level it's been since 2022. So there's certainly a steepening trend going on. I want to take you to volatility indicators, though. VIX obviously is a metric that we watch closely. Still very low, very subdued levels. Why is the VIX so low when you consider the upcoming risks around policy, around Fed decision-making, around tariffs, around inflation? Why is the VIX so low?
I think there's two problems. First of all, you've had this Goldilocks momentum, and the Goldilocks momentum generally is good for anchoring volatility. On top of that, you mentioned it earlier, part of the Goldilocks momentum has not been that the economy has been doing really well, because actually labor markets in the US have been softening. It's really been earnings, and in particular a few very specific companies, the Magnificent Seven, some of the financials that have been leading the market higher, and that creates dispersion. That actually means that the correlation between stocks is very low, so that also anchors volatility. So you have a combination of both Goldilocks and dispersion being very high, correlation being low between stocks, that anchors volatility. And that makes it incredibly expensive to be long volatility strategies, being long the VIX, being long options. And the momentum obviously has been positive, so people have been holding off from buying hedges. But once the momentum turns, that can quickly return the hedging demand. So from that perspective, I wouldn't necessarily treat the VIX levels as forward-looking at this point.
Yeah, it's a good point, because if you do want to hedge your portfolio, let's say you're concerned about what's going to happen in the next couple of months, typically these hedging trades tend to be quite negative carry, punitive for your portfolio. Are there any hedges out there that you would recommend to clients to start considering that aren't as punitive or aren't as negatively carrying?
Yeah, I mean, we've written quite a bit about this Goldilocks regime, and to break out of that often takes a bit. So like a few weeks ago, we were saying don't fight the Goldilocks regime by essentially being kind of long volatility, buying puts, but potentially what could make sense is to replace existing cash equity holdings with call options, which means that you retain the upside optionality, but you're a bit more protected to the downside, and you're also taking advantage of the cheap volatility. Or you have to look at spreads. You can look at put spreads, credit spreads, like payer spreads, but I think you have to be a bit more focused on mitigating negative carry. And obviously, when you're in a Goldilocks regime, what we always say, the first line of defense is diversification. So rather than hedging, maybe it makes sense to add selective defensive exposures within equity, which have been majorly lagging, like low volatility stocks, infrastructure stocks have been majorly lagging. So you might be able to diversify some of the equity risk without actually introducing negative carry.
Yeah. So that on that point of diversification, I remember back in April when the U.S. exceptionalism thesis was being tested, people started pouring money back into European equities. And of course, you fast forward to today, and you're getting this massive sell-off in French assets that's reverberating across the whole continent. You see the growth profile, growth projections for Europe also being trimmed down as well. Is there any merit in still hanging on to that trade and being overweight European equities versus U.S., or has it run its course?
I think the international diversification theme is not just about Europe. I mean, think about what happened in China in the last few weeks. China equities have done fantastic. So I think you want to think about international diversification as a global theme, and I think that will stay with us. I think in the coming months, in the coming years, people will try to deal with U.S. asset dominance in their portfolios, and not just equities, but also bonds. But to your question now, I think we're dealing with a difficult return after the summer holidays for Europe, because you, on the one hand, you kind of have the French elections, and on the other hand, positioning has somewhat picked up quite a bit. The leadership within Europe, however, has not been that bad, in the sense that it's been like stories that have been fundamentally backed. So banks, for example. So we just need to see if the French situation really escalates. Our expectation would be that the government holds together. There might be a new kind of caretaker coming in. But if there's new elections, of course, that would be a major shock to European risk right now.
Yeah, I guess, final quick question from me is the most important event this week not the Fed, not inflation data, but actually NVIDIA earnings tomorrow, because that's going to determine the trajectory of U.S. equities from this point onwards, given how important and how much leadership NVIDIA has these days.
No, I think you're right. I think all the Magnificent Seven matter a lot. And the market has definitely, over the summer, since the Q2 earnings season, has increased its excitement around AI again. So if you see any sign in the NVIDIA earnings that this excitement is unfounded, it could definitely add to the pressure, considering how much positioning we have. And I think the hurdle rate is high, I would say. Once you are in these kind of clusters, I think you really need to deliver something in those earnings that convinces the market that it can extrapolate a negative factor. That's something that will hurt the stock for multiple quarters, because it's a compounder. So I think the hurdle rate is quite high, but I agree. Any type of Magnificent Seven earnings, considering the narrow leadership, the concentration on those stocks, is a real event that might actually rival a lot of the policy events that we are having.
Christian Mueller-Glissmann, head of asset allocation research at Goldman Sachs, thank you so much for joining us. And just a quick line coming through. Abu Dhabi's Lunate has taken a stake in Brevin. They've committed $2 billion. It marks a major milestone for Brevin Howard, which opened an office at ADGM in 2023 and continues to grow, and now have received this $2 billion commitment in a newly created investment platform in the Emirates. So that is some hedge fund news coming through from Abu Dhabi. And of course, I'm over here in Dubai. All right, coming up, French Prime Minister Francois Bayrou calls a confidence vote in his government over planned budget cuts and tax rises. Details next. This is Bloomberg. French Prime Minister Francois Bayrou has called a confidence vote over his budget proposals that could topple France's government next month. The move prompted a sell-off in French assets as investors hedged for more political uncertainty. 3 political parties immediately said they would vote against the motion, but Bayrou said the vote must take place as he tries to make cuts. Let's get more with Bloomberg's Caroline Conan in Paris. I guess, Caroline, the question that I've been asking is, why is he calling this confident vote, given he's unlikely to be successful and given his approval ratings are the lowest of any prime minister in Macron's term as president?
And that's a very good question, Jumana. In fact, he's trying to anticipate the social anger that was supposed to start a couple of days later on September 10, because a few far-left groups have called on social networks to totally block the country from September 10. Even the finance minister, Eric Lombard, was saying on the radio this morning this idea of trying to block the country, perhaps a new kind of yellow vest movement, is very toxic. So that's why Francois Bayrou tried to anticipate this social anger. He knew he would face some votes of no confidence anyway on his budget later in September and in October. So he's trying to move ahead by testing the waters before, but it is a very, very risky move. And in fact, last night, immediately after he said he would call this vote of no confidence for September 8, we heard from the National Rally and the far left wing saying they will vote against Francois Bayrou. The Socialists were a bit more vague, saying they will present an alternative budget over the next few days. But at this stage, it is unthinkable they will also give their confidence to Francois Bayrou. So at this moment in time, the chances of a government collapse on September 8 are very high.
And yet it's been such an arduous process, even selecting the prime minister to begin with. At what point do you think President Macron will have no choice but to call yet another round of parliamentary elections?
President Macron has repeatedly said that he will not resign. And in fact, even the National Rally of Marine Le Pen has said that her goal is not for Macron to resign, but at the moment she's calling for new snap elections. As you know, the snap elections were in July 2024. So technically, it's been more than 1 year. Technically, Macron could possibly call new snap elections if he wanted. Now, the question is, what will be the market reactions to that if that happened? At the moment, we've seen since last night the reaction on the French assets, the CAC 40 down again this morning, down 1.5% yesterday at the close. And of course, the pressure on the French bond market with the spreads widening with the German bonds. And in fact, we could technically see the yields going higher than Italy, according to the finance minister, if we face another political chaos in France in a couple of weeks' time.
Yep. Bloomberg's Caroline Conan, certainly a big market reaction today we're seeing in French assets across the board. Thank you so much for the overview there. Now, the Trump administration is working to halt development of another offshore wind project, this time near Maryland. It's the latest escalation in the president's war on wind power, and it comes after officials on Friday ordered work to stop on an offshore wind farm by Denmark's Ørsted that is 80% complete. Let's get more with our energy and climate change reporter, Will Mathis. So Trump in the past has characterized wind turbines as birds killing eyesores. I guess the bigger question is, why is he so against wind farms in particular? It can't just be on aesthetic grounds.
I mean, it's hard to say exactly why. He's long hated wind farms, particularly offshore wind farms. He was lobbying against one that was built off the coast of his golf course in Scotland, saying, you know, it looked bad, and he maybe still thinks they look bad. And he also says that he doesn't like the economics of it. He'd rather gas plants, and his administration has been favoring gas and coal and trying to stop the expansion of wind.
Meanwhile, yesterday we were talking about the other company that he set his sights on, Ørsted, and again, interfering there with their own offshore plans in the U.S. But the company has come out and said that they still plan to go ahead with this $9.4 billion share sale, trying to reinsure investors. But of course, we had that major pullback yesterday of almost 20% in the stock price.
Yeah, I mean, the management of Ørsted is here in London today. They're scheduled to be in Frankfurt later this week. They've said they are going ahead with plans to do this share sale, and their biggest investor, the Danish state, says they are still backing it, think it's the right plan. So we'll see what the investor appetite is, given this huge uncertainty for them with, this one offshore project in the U.S. that's already been stopped, and they have another one that could be stopped as well if the Trump administration decided to do that.
Yeah. Bloomberg's Will Mathis, thank you so much for the latest on Trump and wind farms. Also making news, Elon Musk is suing Apple and OpenAI, accusing the two companies of thwarting competition from other chatbot makers, seeking billions of dollars in damages. The lawsuit argues that Apple's decision to integrate OpenAI into the iPhone's operating system inhibits rivalry and AI innovation, as well as harming consumers by depriving them of choice. OpenAI says the move is consistent with Musk's, quote, ongoing pattern of harassment. The case sets up a high-stakes showdown between the richest person on the planet and one of the world's most valuable companies. And coming up, we speak to geopolitical strategist Tina Fordham about what's holding up a meeting between Vladimir Putin and Ukraine's Volodymyr Zelensky. That's coming up in the next section. This is Bloomberg. Good morning and welcome to The Pulse. I'm Jumana Bersetchi in Dubai, and these are your top stories. President Trump moves to oust Fed Governor Lisa Cook over allegations she falsified mortgage documents, but Cook refuses to quit. Digital tax backlash. Trump threatens fresh tariffs and export restrictions on advanced technology, blaming digital services taxes he says discriminate against U.S. tech giants. Plus, French assets sell off as Prime Minister Francois Bayrou's decision to call a confidence vote continues to ripple through markets. President Trump says Vladimir Putin's personal dislike of Ukraine's Volodymyr Zelensky is stalling a meeting between the two leaders. The White House has previously said it believed Putin agreed to a meeting with the Ukrainian president and that planning was underway. But the Kremlin never confirmed their commitment, and no summit has yet been scheduled.
That was not easy for him to go to Alaska, for him to come here. But the fact that he showed up on a very successful day, it was a very successful day for other things. Because, we're also talking about missiles, nuclear. We're talking about a lot of different things. We're talking about limiting nuclear weapons. We'll get China into that.
Joining me now is Tina Fordham, founder and geopolitical strategist for Fordham Global Foresight. Really good to have you with us, Tina. It's amazing how quickly the news flow just moves on. A week ago, the most important thing happening was this Alaska summit. And we got a full spectacle. We got quite literally a red carpet for President Putin being rolled out. You had Zelensky visit the Oval Office. He's wearing a suit. The EU leaders came along. So the full spectacle. But I guess the question is, has there been any significant progress in terms of taking us one step closer towards a peace deal?
Well, you're right to use the word spectacle, Jumana. It really was just full of international relations and diplomatic signals. The team visit to the White House by the 7 European leaders, biggest in 100 years, the red carpet rolled out in Anchorage and everything else. We are back to square one, however, apart from one very important distinction, which is that Vladimir Putin has come in from the cold and has been rehabilitated, if he ever was on the wrong side of things with President Trump, without having to budge or make any concessions. But this puts the peace process in a very awkward position.
What do you think an eventual peace settlement might look like? I mean, we know that President Trump is very focused on getting this across the line. We can question his motivations. Maybe it's because he wants to get the Nobel Peace Prize. But for whatever it is, he's very focused on getting this done. What do you think a potential settlement could look like?
Well, I think that President Trump is quite sincere. I mean, he talks repeatedly about wanting to stop the killing. And of course, I think he's sincere in wanting the Nobel Peace Prize. Only 4 U.S. presidents have ever received it. So he is committing a great deal of his political capital to bringing these leaders together. But there are limits to what leader-level meetings can accomplish. Even the Korean War armistice required, 2 years of technical meetings. And so what we don't see is very much muscle being brought into making all of that happen. But can we get anywhere without this trilateral that President Trump wants? I mean, there's a lot to be said to Trump's willingness to kind of cast aside diplomatic conventions and stop tolerating the layers and layers of bureaucracy that usually are involved in these kinds of negotiations. But it's not right to say that Putin won't meet Zelensky because he doesn't like him. It is more to do with the fact that he doesn't want to be seen in a lineup with a leader that he regards as illegitimate. Now, why is he illegitimate in Putin's eyes? Because Russia and Putin in particular do not regard Ukraine as a real country, a sovereign country. And that's why we are in this place to begin with.
Yeah. In the absence of moving along with these discussions, do you think that President Trump's patience will actually run thin and he will end up following through on some of those threats to impose extra sanctions on Russia and Russian exports?
So Trump does lose patience and becomes frustrated, and that could really be, brought in as a meaningful stick. He certainly provided Russia with a lot of possible carrots, cooperation in the Arctic, and other kinds of business deals. But this is where I think what we are observing, both with the behavior of Russia and also with Israel, is geopolitical impunity. Both Netanyahu and Putin are not concerned about the kinds of punishments or penalties they might receive from the United States. And my argument is they are both going to push for as much advantage as possible during this window. And it's easier to ask for forgiveness than permission.
Yeah, since you bring up Israel, let me just bring you to some developments in this part of the world. The Lebanese government's decision to disarm Hezbollah. Yesterday, we got some comments from the Israeli prime minister saying that they support this decision. It's, quote, a momentous decision from their perspective, and that they would think about withdrawing from southern Lebanon so long as the government follows through. How significant do you think this is, Tina?
Well, I was surprised to see those words, being attributed to Netanyahu in the first place. But I won't take them seriously. It may be the kind of statement that can be made on the expectation that it won't actually happen. But we have to remain hopeful, don't we? Or we wouldn't be able to get out of bed in the morning that progress can be made here. And if Lebanon is serious about disarming Hezbollah, that would be a plus. But there is nothing, there are no constraints that require Netanyahu at the moment to do anything.
How closely linked do you think what eventually ends up happening with Hezbollah disarmament is to the Iran file and the Iran portfolio? Because, again, I spoke about this at the beginning of the interview. The news flow moves very quickly, and people have sort of moved away from the Iran-Israel war and the fact that U.S. actually got involved in that war. Do you see that portfolio, that file, regaining attention and momentum once again with the Trump administration?
I mean, Trump's sort of got foreign policy ADHD, hasn't he? So at the moment, he's all about the Fed. We just had the Jackson Hole meetings. He is committed, it seems, to really testing the limits of executive authority in the United States. But he may very well come back to Iran. I think in very long horizons, right, to bring in the name of your show, but conflicts end when one side gives up. And there is a great deal of strategic patience between all the actors in the Middle East conflict. They're in this for the long haul. And so when I was thinking about Hezbollah and incentives and the kind of comparative decline of Iran's power, I thought actually of Ireland and the peace process there. And that's a great example of a peace process that involved a great deal of political capital from all sides committed to making it happen after a very long period of time and a high toll, both in blood and in treasure. And the question becomes then, have we reached that point? As you know better than anyone, Hezbollah has caused a great deal of pain for the people of Lebanon, and yet it still retains domestic support. So, who is going to make that call, and what do they get in exchange? So conflict resolution is slow, painful, surrender first, and technical details negotiated over years. We have to be open to signs of hope. I think this is a good one, but show me. Yeah. Tina, always good to talk to you, and thank you for the Horizons pun. I appreciate it. Tina Fordham, Fordham Global Foresight, a geopolitical strategist and founder.
Now, President Trump says the U.S. has more leverage over China on trade than the other way around. He cited airplane parts as a key item Washington has to counter Beijing's restrictions on rare earths. Meanwhile, the Wall Street Journal reports a senior Chinese trade negotiator is heading to Washington this week for what could be the first round of negotiations in the U.S. Capitol. The report comes as both sides extend their pause on higher tariffs through to early November. And the EU finally agreed a trade deal with the U.S. in late July, under which most European products sold in the U.S. will be subject to a 15% tariff. That rate has given European businesses some sense of predictability, but there's still many challenges. Let's get more with Bloomberg's Charlotte Hughes-Morgan in Amsterdam. So you've been having conversations to many of these European companies. I would have thought that maybe with some clarity around the trade deal and what the tariff is, that these companies would be feeling better about their prospects. What has been the mood?
I mean, I think there is an element of relief among some of these business leaders that we spoke to around Europe. We spoke to people across sectors, across countries. But I think it's more realistic to say that there's gloomy resignation. I mean, so many of the people we spoke to said, you know, this is, at least we know what the rate is now. It's 15%. But it's not ideal. I mean, there are still so many difficult decisions that these businesses are having to make, decisions around pricing, how much of the tariff cost to pass on to their customers, long-term investment decisions. And there is still lingering uncertainty and kind of caution among these business leaders. You know, will Trump stick to the 15% rate? There's been so much back and forth. There have been promises of exemptions for certain sectors. So there is still uncertainty, even though we have that 15% rate. And we've got to remember, I mean, so many of these companies have spent years building up their partnerships with US customers. Their supply chains are really complex. And so it's a real headache for a lot of these business leaders.
Yeah, I guess for many of these businesses, they have the choice of either swallowing the extra costs, passing it on to consumers, or finding different markets to sell their products into. How are these businesses adapting?
So it's a really good question, and it's a really complicated one to answer. It often depends on the sector, but I think a lot of the people we interviewed said pricing is key. You know, how much can they pass on of these extra tariff costs to their US customers before those customers look for alternative sourcing, and how much as a business can they realistically absorb and continue to function? I mean, these are the questions that these businesses are facing every day. And I think we've had a mixture of responses. I mean, some German companies we spoke to said, actually, OK, we're going to commit to the US. We're going to spend a lot of time, a lot of money building up our operations there. So essentially, you know, Trump's plan is working in that instance. Others say, look, no, that's too expensive for us. We need to commit to having operations in Europe, and we'll continue to export to the US. And we just need to work out how much our end customers are willing to pay. And obviously, it goes without saying that then trickles down to the US consumer, the end consumer, and those prices will have to rise. But it's not something European leaders want to do, but it is just the nature of the way the modern, supply chains are set up.
Yeah. Well, how to bring it all the way back to the beginning of our show, talking about the Fed and Fed decision-making with those higher prices. Bloomberg's Charlotte Hughes-Morgan in Amsterdam. Thank you so much. Now let's turn to the credit market. Spreads may be seeing record tightness and are priced to perfection, but could credit market investors be too complacent about potential risks? For more, we're joined by Mahesh Bimalingam, Global Head of Credit Strategy at Bloomberg Intelligence. Mahesh, taking a look at how some of these IG high-yield spreads are trading, you have to go all the way back, in some cases, as far as 1995 to get to this level of spread tightness. Why is credit trading so tight, given how many uncertainties exist in the global economy right now?
Right. You're right. When you say that, for example, U.S. credit is trading at, 1995 levels and slightly, picked up. European credit is trading, near 2007 tights. Asia credit in raw terms is actually tighter than both of us. So the thing is, yes, credit is tight. Credit is rich once you normalize it by volatility. But the point is, why has that sustained? One reason is that credit fundamentals have held up very well. Now, you've been through tariff season, but through tariff season, credit earnings, more importantly, credit ratios, In credit, we are not obsessed with, the upside, but more importantly, we need companies to pay down. And you've seen, leverage ratio, interest coverage ratio, debt to equity, all of those hold up. But then there is a second reason, which is the chart you see on the screen, which is in terms of the alternative, credit clearly beats the main alternative, which is rates. As you can see, credit has been, since post-pandemic, it is one-third volatility, or rather rates are 3 times as volatile as credit. So if you are investing in fixed income, credit has to be your dominant, risk-reward profile asset. It's sort of been the safe haven.
Yeah. Yeah. So vol-adjusted returns are there, preferential to other fixed income instruments. But looking ahead, in an environment where U.S. growth has started to falter, and even, you had the Fed chair reference it last week, what does credit do? It will be difficult to sustain this level of tightness in an environment where the global macro backdrop is weakening.
Yeah. So, of course, the lower parts of the credit spectrum are very sensitive to, let's say, recession and so on. We are less sensitive to inflation, but more sensitive to a recession because, creditworthiness drops. As of now, it is okay, but we need to keep an eye on what is happening to particularly the U.S. and European growth rates. Also, we are sensitive to what is happening to, governments and their policies and so on. So, for example, today, highly topical, we have the French issue, and as a result, credit, given that it is very tight, went wider by about 2 basis points on main and about 8 basis points on crossover. Yes, compared to what has been happening in other asset classes, this may not be a lot, but the point is there is room to give, given how tight spreads are.
Yeah. That's a good place to leave it. Mahesh Bimmalingam, Global Head of Strategy for Bloomberg Intelligence, thank you so much for bringing us your report. Now, coming up, Fed Governor Lisa Cook says she will not quit after President Trump moves to fire her. We'll look at the market implications next. This is Bloomberg. UK grocery prices edged up in August as bad weather and poor harvests exacerbated the strain of higher operating costs hitting supermarkets. The British Retail Consortium says food inflation rose to 4.2% from a year earlier. That is the highest level since early January 2024. Joining me now is Charles Allen, Global Retail Research Analyst at Bloomberg Intelligence. So 4.2% food inflation. These figures paint a very difficult picture for the UK food markets here.
Yeah, good morning. I think it's worth remembering that food inflation is never actually that bad for the retailers. They continue to get cash in through the door and so on. But it is bad for their consumers. And in particular, it encourages consumers to spend less on other things, because if all your extra, you have to spend extra on food, you have less to spend elsewhere.
Right. So discretionary versus non-discretionary. Yeah.
Yes, exactly. I mean, and I think what there have been fears of a UK price war, and we saw in the earnings, which you can see in the chart there, that the earnings estimates fell off very, very sharply in March on those fears of the price war. But as inflation has picked up subsequently, they haven't really dropped again. And I think that we can, people are more confident that any cost increases can be absorbed by the extra revenue everyone is getting.
Yeah. Okay. So have supermarket strategies been hit by this trend, or have they been able to pass on these costs to consumers?
Well, yes. I mean, that's one reason why inflation continues to go up. But I think what we've particularly seen is that obviously, there's a change in the mix. You have to continue to have a very strong focus on value. And we see that with things like Aldi Price Match and a lot of promotional activity, mostly funded by suppliers. But in addition to that, consumers do take treats from stores. So some of the top of the range lines have also done well because people are not eating out, so they treat themselves to something from the supermarket. So focus on value, but also making sure that consumers have treats when they want them.
Sounds like my kids trying to get treats, extract treats when they want them. Charles Allen, Global Retail Research Analyst at Bloomberg Intelligence, thank you so much. Well, let's get more on one of today's top stories. President Trump moving to fire the Fed Governor Lisa Cook in an escalation of his attack on the central bank. Cook has disputed Trump's authority and is refusing to quit. We're joined now by Marwana Kaniam, a co-editor of Bloomberg's Markets Today blog. So we're seeing a bit of an impact across U.S. assets today, a dip in the USD. U.S. Treasury, the curve is steepening, equity futures slightly in the red. Do we expect this to continue?
Well, yeah, I think the key thing is what that move really means in terms of the U.S. president's sort of intentions for the Federal Reserve. And he's made it very clear that he wants to see them taking a more dovish approach to monetary policy. And so if that is the ultimate consequence of this, that's what we're seeing reflected in the Treasury market today. We're seeing yields actually falling slightly at the shorter end of the curve, but at the longer end of the curve, they are elevated because, of course, more cuts longer term could feed into inflation expectations. And that's something the market seems to be sounding a sort of voice of concern about. And I don't think that anything is going to particularly change that today, particularly as we're also seeing it carried across in other regions, although there are also localized issues going on there, such as in France, that's affecting, European yields. And so I think overall, we're seeing the dollar weakening, and that also does support other currencies. And so it's a very just risk-off picture today, broadly overall.
Yeah, it is risk-off, and you bring up France. I'm keeping a close eye on the price action today. You've got the CAC 40 down 1.7%. You've got 10-year French-German spreads back up to 78 basis points, so almost back to where we were in April. How is the political uncertainty expected to hang over some of the French assets that I just referenced now in the coming weeks?
Well, as you mentioned, the French stock exchange is the weakest at the moment. In Europe, is dragging down stocks across Europe, and particularly in the financial sector. So, banks like Société Générale and Crédit Agricole are lagging the stock 600. And that is, we're seeing those yields higher. And, that has implications for the cost of borrowing. So that's not going to be good for financial stocks like across the region. And we're also seeing those divergences between countries, and we're seeing in the UK as well, though. And again, there's a little bit of catch-up, perhaps, from what's happening in Europe. But there are also concerns about the UK's fiscal situation ahead of the autumn budget, and we're seeing the yield curve here actually, at its widest, I think, in about 8 years. So there's quite a bit of concern and fragility in the market. Across the region, as well as in the US. So I'm not sure that specifically, the French situation is impacting, all stocks, but it is certainly hurting those the most today.
Yeah, just a quick one on euro. It's holding up despite these uncertainties, and perhaps because markets are not expecting any further imminent easing from the ECB.
Yes, the euro is holding up. I think we had expected there to be some weakness. It has seen a bit of recovery. I think, the interest rate cut picture going forward, is going to be key there. I think against the pound, it is a little bit weaker this morning. The pound, there's got a few things going on for it today. And of course, we've got to really look at that in the context of the dollar. So the euro is probably benefiting from some of that dollar weakness, as is the pound, rather than it being anything specific about the euro itself this morning.
Yeah, makes sense. Today is a day of dollar assets being sold off, as we spoke about. Marwana Koniam, a co-editor of Bloomberg's Markets Today blog, thank you so much. Well, that wraps up this edition of The Pulse. Up next is Bloomberg Brief. Stay with the channel. This is Bloomberg.